What exactly is inflation? Inflation is a term that is often thrown around in discussions about the economy, but what exactly does it mean and how does it affect your personal finances, specifically your bank accounts? Let's break it down. In simple terms, inflation is the rate at which the general level of prices for goods and services is rising, leading to a decrease in the purchasing power of money. This means that over time, the same amount of money will buy you less than it did before. In other words, your money is worth less in the future than it is today. So, how does this impact your bank accounts? Well, consider this scenario. Let's say you have $1,000 saved in a bank account with an interest rate of 2%. If the inflation rate is 3%, your money is actually losing value over time. While your savings may be growing with the interest earned, the purchasing power of that money is decreasing due to inflation. In essence, your money is not growing fast enough to keep up with the rising cost of goods and services. To put it into perspective, let's say you have $100 saved in a bank account today. If the inflation rate is 2%, in 1 year, that $100 will only be worth $98 in terms of purchasing power. And this effect compounds over time, leading to a significant erosion of the value of your savings. So, how can you mitigate the negative impact of inflation on your bank accounts? Here are some practical tips and strategies. 1. Invest in assets that have the potential to outpace inflation. Consider investing in stocks, real estate, or other physical assets like gold and silver that historically have provided returns higher than the rate of inflation. 2. Diversify your investments. Spread out your investments across different asset classes to reduce risk and increase the likelihood of earning returns that outpace inflation. 3. Consider alternative savings options. Look into high-yield savings accounts, certificates of deposit, CDs, or other investment vehicles that offer higher interest rates than traditional savings accounts. 4. Monitor your expenses. Keep track of your spending habits and look for ways to cut costs and save money. This can help offset the effects of inflation on your purchasing power. In conclusion, inflation is a concept that can greatly impact your bank accounts and personal finances. By understanding how inflation erodes the value of your money over time and implementing practical strategies to mitigate its effects, you can safeguard your savings and financial stability in the long run. Stay informed, stay proactive, and stay financially savvy. If you want to stay ahead of inflation and don't want to see the value of your savings decay right in front of you, consider investing a little every month in gold or silver. Click the link in the description to see the source I chose. You'll sleep better at night knowing you're taking positive action.